The Road Act just became law without the president's signature, not through a veto override, not through a press conference, but through Article 1, Section 7 of the Constitution. Congress, they stayed in session. The 10-day clock expired, and the bill became law automatically on July 11th. If you or a client controls 350 or more single family homes, you now have a hard compliance deadline of approximately January 7th, 2027. And that is just the first of 6 major shifts I'm breaking down in the next 8 minutes. In just 2 weeks, mortgage rates ripped up and then crashed back down, a nearly 20% round trip off the back of oil. June jobs and inflation data told two completely different stories. And here in Spokane, 42.9% of active listings just took a price cut. Ooh, ouch. Stick with me now. My name is Robert Homewood, and I am an investment mortgage broker based out of here, Spokane Valley, Washington. And this is Open Lane Funding. Over the next 9 days, I'm walking you through every section of our July 20th Market Delta Report. What changed since July 5th, and what it means for your next investment deal. Let's start with rates because everything else in the report always connects right back to here. The 30-year fixed rate per Fannie Mae's primary mortgage market survey hit a 7-week low of 6.43% on July 2nd. Just 2 weeks later, on July 16th, it printed at 6.55. That is an increase of 12 basis points, and it's not because the Federal Reserve turned hawkish. It's because of oil. West Texas Intermediate crude spiked to $74.71 or 71 cents, right? $74.71 on July 8th after the fresh United States military strikes on Iran. Then it kept climbing to a 5-week high to nearly $82 by July 17th. That is a nearly 20% round trip higher in about 2 weeks. And then it is the single biggest swing favor for mortgage pricings right now. As of the report date, best execution DSCR pricing of the top tier, let's say 70 better with a 1.25 or better coverage ratio, 65% loan to value, is running in the 6 to 6.35 range right now. The standard tier is holding closer to about 6.25 to 6.66%. Current lender indications only. Nothing here is going to be guaranteed. Here is where it generally gets strange. The June Consumer Price Index fell 0.4% month over month. That's the largest single month drop since April 20th, 2020. Sorry, everybody. Maybe I need a little bit more caffeine. Pulling annual inflation down to 3.5% from 4.2% in May. Producer prices told the same story, down 0.3%, also the largest drop since April 2020. That is a massive disinflation surprise. But it happened during the same window oil was spiking in the Iran conflict, which means the July inflation data due August 12th could reverse all of that. The bond market has already priced this bifurcation. The CMA FedWatch shows that an 88.8% probability the Fed Reserve holds steady their rates on July 29th. But September hike odds have actually climbed to 44 to 51%. And hold now, right? Hike risk is later. That is the setup. Now, here's why that matters for you specifically. If you're underwriting a deal today, assuming rates keep drifting lower because that good CPI print, you're underwriting against oil, not against the Fed. And oil right now is telling a completely different story. Locally, the Spokane Association of Realtors just released June's numbers, and that hit 562 sales, essentially flat year over year. Median price closed at $436,250 and 1,540 units of inventory. That the number that actually matters here is 42.9% of active Spokane listings have taken a price reduction, up to 11% from a year ago. Sellers are conceding on price even while the headline transaction count looks stable. That is a classic late cycle buyer's market signal inside a boring headline number. In Coeur d'Alene and Post Falls, Idaho's House Bill 583 and their bill for the Senate Bill 1354 are now 18 days operative with no enforcement challenges reported, protecting short-term rental operators and setting up the accessory dwelling unit mandate ahead of its February 1st, 2027 deadline. Speaking of deadlines, the Section 301 forced labor tariff finalization is targeted for around July 24th, just days from this video, and it will directly affect construction material costs for fix and flip and build to rent clients. The Road Act's institutional investor compliance of January 7th, 2027 is now a fixed point every fund client needs on their calendar. If you're finding any of this useful, hit that follow button or subscribe now so that you can catch the next 9 days of the series, because I'm going to do a deep dive on every single one of these topics. Now, Adams' mid-year report released July 16th showed 227,584 total foreclosure filings in the first half of 2026. That's up 21% year over year, with completed foreclosures up 33%. But timelines are shrinking to 563 days on average, the shortest since 2013. Now, that's an efficient processing, not systematic distress. Coming up over the next 9 days, the best markets to buy nationally, strongest starting appreciation areas, rental demand trends, and the full foreclosure breakdown by state. The full picture as of July 19th rates whipsawed on oil. The Road Act became law. You have Spokane sellers are conceding price, and 3 major data releases land July 28th. If you want the actual loan scenarios and deal structures behind these numbers, call at 208-215-9936. It's in the description as well. Or you can go to openlanefunding.com and book a time on my calendar that works for you. I'll look forward to talking with everybody. Have a happy Monday, and I'll see you guys on Wednesday.